Hello everyone. Do you know what this is and where it is? How about this one? Now you know. I'm going to cover the bank uh, in this video and Citibank particularly. Just to let you know that the first one is actually the Citigroup Tower in Shanghai, and this second one is the former Citigroup Tower in New York. So before I get started, please, if you like this video, hit subscribe and give me a like, and also that will really help me tremendously because I'm trying to really boost up the followers for people who are listening to and have been, follow me for my recommendation of stock. So in this video, I'll cover the following: Citigroup business background, what are the earnings they have been, why this is a quick buy, how you compare with the peers, and what's next. Okay, just to give us some background, Citigroup founded in 1998 from merger of Citigroup and Travelers Group Incorporated, and as of December 2016, is actually operated in 97 countries and offers services to over 160 countries. And I'm sure you have the idea what banks do, because you have some really general idea. So you can see the graph and basically who are the players and what are the functions they do. So I'm really not covering details there, but just to give you a highlight that Citigroup provide consumers, corporations, government institutions with a range of financial products and services that including consumer banking, credit, securities brokerage, trade and security services, and wealth management. And with these services they provide, obviously they pay the fees or service fees, and they charge you money for the differences between what people deposit money and getting interest for versus what they are borrowing or lending the money to the corporations or personal or business or personal use. That's how they make the money between the two as well. And the stock has survived the financial crisis in 2008. So for the young generation, probably have no idea what the heck 2008 happened. But for people who are older, like my age, know what's going on. So the stock actually hit a pretty back, and they lost 95% of the value. But since then, through restructuring, government help, you have repositioned again back to the ground. So again, this company is really recently. The stock have been beat up due to a report about business practice and money laundering detection. Still, it is a very solid stock. Otherwise, I won't be talking about it today. So let's run through some numbers. Let's look at the graph very quickly. This is a graph telling you that in 2018, the stock is trading around $80. And in 2020, at the beginning of January, it's also trading around $80. And during pandemic, you can see that the stock really get beat up very badly, about $34, which is yen low. And there was some rough time in October again, so you can see after the support and help from government with stimulus and and actually supporting some asset purchases, the stock had gone up. But then in October, you were kind of running through some rough time again, and recently have been rebounding. So that's is also one reason why I'm recommending this stock now. In terms of valuations, you can look at that. The stock had 128 billion market capitalization, which actually bigger than Wells Fargo, but smaller than Bank of America and JP Morgan. But however, the revenue, from a revenue perspective, is only smaller than JP Morgan, 63.6 billion, but much larger than Bank of America. So what I like about this company, in terms of the earning analysis, you can look at that. In the 2018 to 2020, they actually, this side meaning they beat the estimate. They beat the estimate quite a bit most of the time. I mean, a couple of times they didn't make it. And you can look at the third quarter of 2020. They really seriously beat the estimates. Well, you can argue that the estimate was pretty conservative, but still, it was actually very nice beat up. It also suggesting that the recovery of this company with the operations is, it can be seen and can really price it into the equations. And what else do I like about this company? The earning per share is positive, which is very important to me, because if the company doesn't make money, and especially after operating for almost 20, not since 1998, right, 20 years, well, it is important that they are making money. Otherwise, I wouldn't really suggesting that, because obviously meaning this company is not a growth company, but should be very sustainable and continuously, expansion in terms of expansion of a growth of a company, different than XPEV and Tesla. Well, Tesla now making money, but in the past, last 5 years, they were not making money. And what is very important as the strongest and biggest selling point right now is this stock is actually trading under the book value. You can see the book price book ratio is 0.72x. When it's 1, that means it's trading at a book value, and in the industry, 1.25. And dividend, the other thing is very attractive is the dividend. They actually giving the dividend yield 3.34%, which is better than the industry average of 2.79%, and also better than S&P 500 1.79%. And return on equity as positive 6%. I would like this number actually be a more aggressive, like a double digit. Okay, so after running through the numbers, you can see the strength and the attractive point of this stock. And then the profit margin, they are running positive 19%, which is very, very great in our operating margins. But why is this one when there's so many choices out there in terms of picking up the bank? So there's some comparison. I'm going to run through the comparison next to let you know how you compare to other peers. Especially, my friend asked, like, how about buying JP Morgan? What do you think? So here's the graph, very nicely and clearly show you that what have been comparing in the pricing of the market of these stocks, bank, which is Citigroup, JP Morgan, Bank of America, Wells Fargo, and US Bankrupt. What you have seen is, you can see the blue line, which represented JP Morgan. It has been really nicely after July. You got up, and then you take a dip similar. All the banks start actually take a dip around October, and then you slightly rebounding going up. But JP Morgan particularly is going up that much. And if you will look at the pricing of JP Morgan, and the reason why this exercise, I did not recommend JP Morgan because I have seen the stock from $90 and have been, since the week before elections, which is like close to $92, and all the way up to now is $125.50. Their 1 year record high is 140-ish. So if you look at JP Morgan, the opportunity for the upside still there, but it's only around $15 for the year high, okay? But in Citigroup, you can see a lot more opportunity there. Then you can argue, why not Wells Fargo? Well, the problem is Wells Fargo have been underperforming. Also look at the size of the company. It may not be as attractive as you think to buy the stock. But if you would have bought Wells Fargo probably way earlier, probably $20-ish, I mean, you actually get a pretty good return, but I'm not so sure now. Okay, so comparison, running through some numbers. The first 152-week change, that's just showing the graph on the top that's showing you, so that's not less important. But the market capitalizations, and Citigroup have a really good size, 127 billion, and it's a good size because if you compare it, obviously, I mean, you have to compare with Wells Fargo and the other two, Bank of America and JP Morgan, actually a lot bigger. And then what I don't like though is the Citigroup had a little bit higher risk. Beta is a measurement of the risk, so it's a little higher compared to the industry, to the bank industry. But the dividend, as I have previously stated, they have a really good dividend. And the PE ratio, by far, if you look compare all across it, you have 11.94, which is the best. And then in terms of fundamental, they have a profit margin, like I said, past a pretty nice double digit. And the earnings growth, which is really a very noticeable number because we're not looking at talking about today, which right now currently trading below the book value, which is really amazing. But the future growth, this company was projected have a 30% growth, which compared to JP Morgan only 15%. And in terms of size, I mean, that is really running much nicer, right? Very good. So that is the reason why I am into Citigroup. And also, but on the earnings side, like you've run through this number earlier, it may not be so attractive. You look at the earning analysis earlier, but on the momentum side, which is the valuation side, using a model and which is different than just historic numbers and pricing into the futures, they are exceptional. The price to EBV ratio, they are doing it really, really, really well. So that's another reason why you want to do it, which here actually showing it. This is coming from the source of Construct. It tells you that the price and EBV ratio is less than 1.1. You see the valuation is all a very attractive rating. In the growth model, and saying well, in less than 3 years, the growth appreciation is less than 3 years. Some of them is growing, but it may take 10 years to really get the return you expected. Okay, and the other report also showing that it is very bullish and it is a strong buy right now on the other report called CFRA. Okay, so right now and this is the other few other buying selling point. Okay, the stock is largely held by institution, which is 75.35%, which is really good number. Trading volume on average is 20 million, which is fair. That means this is not a small, tiny penny stock. Okay. And last selling point is, if you have heard about what Powell was saying during the meeting or previous week, probably like before the Christmas, the Wednesday talking about the interest rate and what is going to happen. They are suggesting potentially they can still do asset purchases. And after that, on that Friday, he also saying that bank is allowed to buy their stock back, buy their share back. In the historically, JP Morgan in particular, the reason why the stock was up so much, they are very good at always buying their own shares. So if Citigroup can do that too, their stock definitely going to be at least push it higher than the book value, which is $83. The book value, $84. The book value. Okay, and the target price right now per the analysts were saying $75. So if you think about it, today trading around close to around $60. If you buy it today, the target is $75 and potential can hit it up the book value, which is $80. You have a 25 to 30% return. Statistically, I can compare to Apple. I'll tell you, Apple pretty bullish right now. You can go and buy it. Well, you kind of missed it a little bit because it should be last week. You bought it before the Apple car announcement. You probably will be pretty good and get really good return. Right now, they're a record high in Apple. But my upside of the Apple, however, is not as much because analysts predict Apple will be about $140, $150. So the upside is about 10%. If you will look at it at this point at $136, right? I think that's where the number is today you close with. So what, $4 upstream or $14, right? It's not as much as this stock. That's the only reason why I'm recommending that. So after you hear all the reason, I hope you find the answers and also know why I recommend it, or at least tell you to consider Citigroup over JP Morgan and other bank like Bank of America have gone up quite a bit too. Now they're $30 too. If you like my video, please make sure to give me a like. Thank you very much. If you have any questions, feel free to send me an email. Have a nice day.